What's up, everybody? It's your favorite mentor, your one and only Forex hero. I go by the name of Ofentse Ledwaba. If you're new to this channel, please do not forget to like, subscribe, and click the notification bell so that you share with your friends and your families and get notified every time I drop a new video. Today's video is all about understanding and identifying the chart patterns. The chart patterns will assist you in getting the right entries and also being able to see where the market is going. You have to understand the chart patterns are able to give us a clear direction and also a continuation or whether an indication whether the market is reversing. So grab your pen and paper. Let's go into the charts. Firstly, guys, let's start with understanding what is a pattern. Patterns are the distinctive formation created by the movement of security prices on a chart, which is why it's called a chart pattern. A pattern is identified by a line that connects common price points, which is the wicks, such as closing prices, highs or lows. So it simply says that you can use a method of identifying or spotting them or indicating them from a wick to a wick or from a body to a body that close. But I prefer using a wick to it so that you don't get caught on the market manipulation during a specific period of time. So you do understand that it's simply saying that if you are having 2 points, let's say the market is moving in this manner, high, higher, low, higher, low. So it simply means that the point where you can be able to draw your chart pattern, the minimum is 2 points. As you can see here, I have 2 points. And then if you want to give it a little bit direction, so this is what is called a chart pattern. The first point will be this one, and the second one will be this one at the top, and then at the bottom you'll have this one, and then second, and then if it comes and touches this one, it will be our third touch. So on this one, these are the different types of chart patterns. Before we go into the chart, I'd like to show you so that we can be able to identify them. You can see with this one, you can see it's a reversal pattern. We have the bearish double top, bullish double bottom, which will significantly state that whenever the market is here closer to your support or at the zone, and sometimes at the demand zone, you know that you are preparing yourself to go to the upside. But this will happen if the market is coming from the top, hence it's called a reversal pattern. It's the opposite of the trend. So basically we are preparing ourselves to go bullish. We have the bearish head and shoulders. That means the market will be at the top. We have the bullish inverted head and shoulders. That means the market will be at the bottom. We are preparing ourselves to reverse. We have the bearish rising wedge. We have the bullish falling wedge, which commonly happens at the bottom closer to the support or closer to the demand zone. We have the bearish expanding triangle, which commonly happens closer to the supply zone or at the resistance. And we also have the bearish triple top, bullish triple top. So now we are coming into the continuation. The continuation is simply a pattern that continues the market. It's a pattern that shows you the market is still continuing into the trend. The market is continuing in the direction that you anticipated. We have the bullish flag pattern. You can see in most cases it touches at the bottom 3 times. That's where it becomes stronger. And most of the time you'll find that the third touch will be at 61.8 or 78.6. Bearish flag pattern, we have the bullish pennant, which commonly happens in the middle or giving you a direction that the pattern is indicating that the market is continuing. Bearish pennant, bullish falling wedge as well, where you'll be having an impulse, correction, impulse. And sometimes this one you can see when you are having a bull run, when you are having a strong bullish trend. And also the bullish flag, you can also identify it as a channel, two parallel lines coming together. And we also have the ascending triangle, descending triangle, symmetrical triangle, which in most cases sometimes it goes either way. This one I call it a bilateral, because you can sometimes go the opposite way. You have to understand, even if the trade hits your stop loss, you have to understand it was the bilateral pattern. Let's go into the charts and identify these types of patterns. Coming into the charts, you have to understand that these types of patterns are visible on all time frames. You can start identifying them on higher time frame, weekly, daily, or you can go down to 4-hour time frame. So let's start on daily so that you can be able to understand. They give us a clear indication of getting the direction of the market. You have to understand that by you training your eye, you get a clear understanding. And also remember, it comes with practice. You can see this one. It's looking in a form of a bilateral, but you have to understand inside this pattern there is patterns. As you can see, it moves up, and then I can say touch here. You see this one didn't touch, but you also take it as a significant area. Let me do this. Okay, we pushed and say up, then so you can see this chart pattern is looking in this way, in a bilateral way, meaning that there's a chance of the market pushing to the upside because of this. And also you can take this as a correction, saying I'm having this impulse move, and then now this becomes your correction, because here you're expecting a move to push to the upside. But let's dive deeper here. I want to show you something. Remember, I said this one could at most say or indicate that it must push further, break this. But for you to buy, it has to break here. That's how we are able to use the chart patterns. But currently, I say the highest probability is to take the market to the downside. As you can see, we have a bearish engulfing candle here, indicating that the market wants to push to the downside. So you can see we started from higher time frame with daily having a bilateral chart pattern, and then now what are we having here? We are having a channel. So you can say this is a reversal because we were pushing to the upside. So let's go further to identify other chart patterns. You can say this one. So this one, I would say it's looking in a form of, it's coming from the top, you see, and then 1, 2, third touch, it pushed up. So you can see it is what, it's a channel, or you can say a bearish flag indicating a reversal, then it pushed to the upside. Another one will be this one. This, you can see it's a reverse, we're pushing to the upside. So inside these chart patterns, there is trades that you'll be able to take. 2 and coming here, then third touch. You see this one didn't touch, but you can take it as a significant area, because not always you get all good trades. Okay, then now I want to show you guys something that happens more often. Okay, this one, what do you see here? We have a triple top. Why a triple top? We have this point, 1, 2, 3. So we knew that we are touching this point, 1, 2, 3. So we expect to push to the downside. And when we are identifying this, we'll further identify patterns within pattern, showing us an indication that yes, indeed, we are in a bullish channel, but then it broke, so we are preparing ourselves to go to the downside. As you can see, this one, it's happening closer or at the resistance. This one is a continuation. As you can see, the market was pushing up, impulse, correction, impulse. Here it is, impulse, then you're having this correction, impulse. So you can see this is how it happened. This is the correction, you see, and you take your reduced entry. So make sure you practice all the steps that I've shown you guys. It will definitely assist you in getting the right trades. Here we have what? A double top. We have 2 points. How would you know you have 2 points? You have 1, 2, then it pushed. So you would know that your TP would have been here. You can see. So all these chart patterns are visible on all time frames. You can scale down to 1 hour, 15 minutes, you'll be able to tackle them. The reason why we are using the 1 hour time frame is that we are able to get the sniper entries, the right entries, so that we don't get to hold for longer or have a big stop loss. So this one, I see it was having a what? A rising wedge. Look at what is this happening. It's squeezing the market before it breaks. So you see it's not much clear. So let me remove this and then I will show you. It's a rising wedge. You see, it's squeezing it to the upside, and we know that it's gonna break to the downside. So we will draw and as I've explained, this one gave us another pattern within a pattern. So make sure guys you practice what I've shown you, and also click the subscribe and share with your friends and families and other people interested. It's your favorite mentor, your one and only Forex Hero. Thank you very much for sticking to the end of the video. If you'd like to learn from us, click the link below, and also make sure you click the notification bell so that you get notified every time we drop something new. Peace.